Welcome back. There are plenty of stocks in focus, so let's get to that very quickly. HCL Tech is the first one on our radar. In a very peculiar fashion, HCL Tech mid-quarter has guided for an FY23 revenue growth to come in at the lower end of its range. Reema's here to tell us what transpired. Reema, this is very odd, right? I mean, HCL Tech generally doesn't change its guidance mid-quarter, but give us the latest.
So HCL Tech has an ongoing US analyst meet, and over there the company has said that growth for this year, FY23, in constant currency terms is going to come at the lower end of their guided band of 13.5% to 14.5%. Now this is a bit surprising because just 2 months back, in mid-October, when the company released their Q2 numbers, the company had in fact upgraded their guidance. Their earlier guidance was 12 to 14%. And then in mid-October, the company raised it to 13.5 to 14.5%. So the lower end of the guidance was upgraded, and even the upper end of the guidance was upgraded from 14 to 14.5%. So 2 months into that quarter, the company has now said that growth is going to come in at the lower end. What we understand, the company has said that it's on account of volatile macros and higher furloughs. So furloughs typically mean that companies towards year end shut down for maintenance and, because of seasonality, the holiday season, etc. This time there was lack of clarity whether the furloughs will be higher than usual. Typical seasonality furloughs will be there, but this time, because of the weaker macros, will companies decide to shut down for a little bit longer, say production, say factories, etc. And we understand that there are higher furloughs seen in BFSI as well as telecom. Now, in BFSI, we know mortgage segment was weak on account of rising rates, but are there other segments which are slowing down in BFSI? And telecom, that's a segment that we're hearing which is weakening for the first time. So that is also fairly, important. So this is an important update that HCL Tech is now saying growth is going to be at the lower end of their guided band. Back to you.
All right, Reema, thanks very much for that. So keep an eye out on that one. Let's revisit Paytm, of course, with the news in terms of what has been announced. And of course, it's the buyback which is going to be considered by the company on Tuesday, next Tuesday. Abhishek is here with more. Abhishek, hi, morning.
Morning, Prashant. So as you mentioned, the company has decided to hold a board meeting to consider a buyback option on 13th of December. Just to alert our viewers, the cash and cash equivalent in the balance sheet was around 9,182 crore as of Q2 FY23, around 9,411 crore as of Q1 FY23, and about 9,271 crore as of FY22. So the total net worth was around 13,564 crores. Remember that last year in November, they had raised about 8,300 crore of cash via IPO. So SEBI rule says that, on the maximum side, you can have 25% of the net worth which could be considered via the tender route in terms of buyback, and about 15% of the net worth on the maximum side can be considered via open market for buyback. So hence, the calculation on the maximum side shows that, there could be a buyback of around 3,391 crore via the tender route, while, via the open market, they could have a buyback of around 2,034, 2,035 crore. Just to alert our viewers, the IPO was priced at around 2,150. Currently, it's trading more than 76% below its IPO price. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Shilpa. She's joining to tell us about HUL. Shilpa?
HUL's foray into health and well-being comes with two strategic investments in this space. Now, the first is a 20% stake in Wellness Nutrition. It's a D2C brand founded in 2019 with an annual run rate currently of about 50 crore rupees. Now, the second one is a plant-based nutrition brand, Oziva, and this is happening in two tranches. 51% now for about 264 crore rupees, and the remaining 49% 36 months from now at a pre-agreed valuation. Now, Oziva had an annual turnover of about 124 crore rupees in FY22, and HUL will have a board seat on both these companies. Now, while these deals are smaller in size, HUL sees about a 30,000 crore rupee opportunity in this space 4 to 5 years from now, and analysts are also upbeat about the fact that HUL has a proven track record of significantly scaling up smaller acquisitions. Now, WeWash and Indulekha are cases in point, and HUL has also said that it will look at bringing some of its global health and well-being brands from the global portfolio to India at an appropriate time.
Okay, this health and well-being market is growing at a rapid rate. There is an expectation of it being a 3 lakh crore market in the near term, and HUL getting into it now. But let's go across to Surbhi. She's tracking some of these insurance companies this morning. Surbhi, over to you.
Hi, thanks for that. The insurance companies will be in focus today. That is because the IRDAI has allowed foreign investors, including FPIs, to invest in preference shares and subordinated debt issued by the Indian insurance companies. The quantum of these investments cannot exceed the sectoral cap. The total capital has to be lower than 50% of the total equity or the net worth. They've also allowed the subordinated debt to be listed on the local stock exchanges. Additionally, the domestic insurance companies can also invest in these debt instruments issued by other insurance companies, but the only stipulation here is they cannot invest if they have a common promoter. But overall, good news coming for the insurance sector.
All right. Thanks very much, Surbhi, for that. Now, Triveni Engineering and JSPL in focus. Vivek is going to tell us why. Vivek, hi, morning.
Well, good morning. Yes, so Triveni Engineering, the entire Triveni group, both Triveni Engineering and Triveni Turbine, since the end of the September quarter, have been striving to simplify the cross-holdings that they held in each other. Remember, in September 2022, Triveni Engineering exited its entire 21.85% stake in Triveni Turbines. And along those lines, in yesterday's trading session, the promoter of the company, Dhruv Manmohan Sawhney, sold almost 7.03% stake in the company. He held over 15% stake at the end of the September quarter. Some of the marquee names that were buyers included Societe Generale, Plutus Wealth Management, as well as Anil Kumar Goel. On the other hand, keep an eye out for both the SAIL as well as JSPL. Now, newspaper reports are indicating that the railway budget this time could be very strong in terms of the railway capex that you could see. So the Union Railway budget could propose laying almost 100,000 kilometers of new train tracks over the next 25 years. And in FY24 itself, you could see 4,000 kilometers worth of tracks that could come in. So that basically implies almost a 30% increase from FY23 in the budgetary allocation as far as railway capex is concerned. So both SAIL and JSPL will be in focus on the back of this particular proposed increase, and also keep an eye out for, given the fact that SAIL also supplies wheels, and we understand that they've been asked to increase that particular segment as well. We haven't independently verified these reports.
And let's see how much can it contribute, Vivek. But normally these are higher margin businesses, so let's see how that works. Thanks so much for joining in and filling us in with all of those details. Well, here's a recap of all the top stocks that we covered. Stocks with positive news flow include Paytm, HUL, HDFC Life, SBI Life, ICICI Prudential Life, Star Health Insurance, Triveni Engineering, JSPL and SAIL. While HCL stock is the lone one that could react to a negative news flow.
All right, but one thing that's really working in favor of the markets is the fall in crude, and it's positive for Indian macros. Manisha Gupta joins in now for a roundup of all the action from the commodity market overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, 10% down this week for the crude oil prices, and we are down 20% in last 1 month for the crude oil prices. It also is the money moving out as you are heading towards the holiday season. So the prices have swung into a contango, and hedge funds and money managers are cutting long positions. Investors also are assessing sanctions impact on Russia. But in the meanwhile, it is also about the weak data that we have seen come in from UK, European Union and China, and the US officials sounding alarm on potential recession in 2023 also continues to weigh on the crude oil prices, but not so much on metals, because when you look at the prices today, whether it's copper, aluminum and iron ore, all of that yet again trading in the positive.